Good morning, all. Sorry for the delay. Just bear with me while I get things set up. Okay, just bear with me. Sorry about this. We're just having a few technical difficulties on this side. All right, let's get this going. Right, so welcome. No, good morning from a rather frosty part of the UK. Welcome to another webinar titled, as you can see here, the Advanced Fibonacci Strategies. For those of you who are unaware, my name's Aaron Hill, and I am one of the market analysts at FP Markets. So for this webinar, we are, of course, back at it with Fibonacci ratios with the main aim of showing how one can apply these ratios to form a technically based strategy. As always, though, whatever I demonstrate here today should be thoroughly back-tested and proved for themselves before applying a method to the live markets. It is fine to fire across any questions you may have during the presentation, as long as it really relates to the slide or the chart in question. Other than that, we can wait till the end and I'll open the floor to more questions. So with that being said, okay, disclaimer. So look, really the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. Now, really, this really means what I show here today, what I demonstrate, is not investment advice. It's simply an educational presentation. Just bear with me. Okay, so as you can see here, we have the agenda for the session. So we'll be looking at defining market structure. So this is really for anyone that's new to trading. So to be able to trade or navigate the markets with Fibonacci ratios, you do need a basic understanding of market structure. So being able to identify trends, being able to identify ranges and things like that. We'll then look at the various Fibonacci components. So that consists of retracements, extensions, expansions, projections, and of course, we'll be looking at things like Fibonacci Confluence. Now, I do see some traders, they're somewhat confused by the extensions, expansions, and projections. Hopefully by the end of this presentation, this will be cleared up for you. And yeah, you'll be able to move on and develop your own Fibonacci strategy. For any questions, as I said, for any questions I miss, it is at the end. I will try to get around to them. As I say in all my webinars, any questions missed or those that need a more detailed response, just email the research team at marketanalyst@fpmarkets.com and we'll get back to you as soon as we can. Also, feel free to email the support team at support@fpmarkets.com. And again, what they'll do is they'll pass the response to us anyway. So it's just as easy to really use the market analyst email. And also feel free to pop over any suggestions for future webinars you would like us to cover. All right, so just so we have a bit of a background, I do want to take us through, just really briefly, through the Fibonacci sequence and how we find these ratios. So to begin with, we'll be looking at the key ratios. So we'll be looking at the 61.8% or the 0.618 ratio. And this is actually a key Fibonacci retracement value and is the inverse of 1.618, which is found by dividing 1 by 1.618. We can also find 1.618 within the Fibonacci sequence by dividing a number by the next lower value. So just to give you an example, let's go 89 divided by, say, 55, and then we have 1.618. But if we want to find the 61 point or the 0.618 ratio, we can just simply 55 divided by 89, and that will give us the very close, rounded up, it would be 0.618. We can, I think it's the higher you go, the closer the ratio will form. So 144 divided by 233 gives us, yes, there we go, 0.618. So to find the 0.618, this is how the ratios are derived. So we essentially, to find the 0.618, we divide up, but to find the 1.618 ratio, we divide back. We divide by the previous value within the Fibonacci sequence. Now, just to prove that the 61.8% or the 0.618 is actually just simply the inverse of 1.618. So that's 1 divided by 1.618, and that will give us 0.618. Now, another point of note, of course, is 1.618 is known as the golden ratio, golden mean, or phi. As I said, the inverse of 0.618 are both numbers that are found throughout nature and, of course, biology, and therefore they are deemed important levels for traders. Now, why do these levels react in the market? Is there some magical formula to this? There isn't. I don't believe there isn't. There is. I think it's more to do with a it's a self-fulfilling prophecy, if you will. The more traders that follow it, the more reactive it becomes. So then we have the 38.2% Fibonacci retracement. Now, how is this defined? Through the Fibonacci sequence. This is simply found by dividing a number within the sequence by the next 2 higher values. So if we divide, say, 34 by 89, just to prove 34 divided by 89, we get 0.382. Now, if we divide by the next 3 higher values, we should get 0.236, I think it is, the 23.6% retracement, which I rarely use, to be quite frank with you. 21 divided by 89, let's give that a go. 21 divided by 89 should give us very close, rounded up, 0.236. So yes, that's how you derive these Fibonacci ratios that we use on our charts. Now, I'm not going to go into the history of Fibonacci and how it was formed and who invented it. A quick Google search will aid that. So and really, we're here for Fibonacci strategy. So look, I do think it's important to point out that while not officially a Fibonacci ratio, the 50% level is also commonly used. It's also included in the Fibonacci retracement tool on most charting packages, but 50%, the 50 is not a Fibonacci ratio, just to be clear. Also, the 100% projection, which I use regularly to pinpoint AB equals CD levels. That's one of the most simplest harmonic patterns. That's also not a Fibonacci ratio. It's just there to help me pinpoint with reasonable accuracy where the AB equals CD level should complete, if you will. So as for Fibonacci projections, look, if you divide the Fibonacci projections, we'll get to those shortly, how we can apply those to the charts. I just want you to understand how we get to those ratios. So if you divide a number by the previous number, as we've already shown, that will give you the approximately the 1.618. I'm not going to go over that again, but so yes, divide by the previous value, that will give you 1.618. Now, another popular Fibonacci projection, of course, is the 1.272% ratio. Now, this is simply the square root of 1.618. As you can see, 1.272. That's it. Nothing more, nothing less. So I won't go into any more detail with that. And that's really all I wanted to show in terms of the Fibonacci ratios. Any questions, guys, please do let me know. I don't see any questions coming through yet, so I assume we either don't care or we understand it. All right, so market structure. So as I said at the beginning of the presentation, the market structure is understanding how to identify market structure is key to being able to plot your Fibonacci ratios accurately. All right, so here we can see we have an uptrend, which consists of a series of higher highs and higher lows. Nothing more, nothing less. I mean, this is obviously a very simplified representation. On the charts, it does look different, of course, but we will see that shortly. We also have a sideways trend, which means a range or a consolidation, which means that buyers and sellers are essentially confined between a support and a resistance. So the trend is taking a breather, or in the phase of potentially reversing. Hi, Steve. Yes, I just saw your question. Can we receive a copy of this webinar? Yes, you can. There will be a recording. The recordings are available on the FP Markets website. I believe we will ping a link in the chat box shortly. There will be a recording on YouTube as well. So just search YouTube, and if you look in the chat box, I believe there will be a link now. There we go. So you can access the webinars through either the FP Markets website, as I said, or the YouTube channel. Links are there, Steve. All right, so defining an uptrend is simply higher highs and a series of higher highs and a series of higher lows. Now, there are other ways to define trends, of course. We can use indicators, we can use the ADX, we can use moving averages. For me personally, I just prefer to use good old-fashioned price action. Now, a downtrend is essentially the mirror opposite of an uptrend, and it consists of a number of lower highs and lower lows. This should have had lower lows put here. I'm sorry about that. There should have been lower lows at this point. So these are lower lows, series of lower lows at this point, and a series of lower highs. Okay, so as I said, you can also help predict or forecast trends via moving averages. You know, for anyone that's followed moving averages, will be well aware of what's known as the death cross and golden cross, which means the 50-day simple moving average crosses above or below the 200-day simple moving average. You can also use the price cross above the 200-day simple moving average to identify trends. There's a number of ways. But as I said, I do prefer looking at trend structure via price action, because really, if you think about it, most, if not all, are derived from price action. All of these indicators, so the moving averages, are derived from price action itself. And the moving average is really just to help filter the ups and downs of the trend, so the volatility seen within the trend. All right, so any questions on this? There isn't, so I will continue. Just bear with me here. All right, so this is where I see some newer traders enter a phase of confusion, because they confuse the extension with expansions and expansions with projections. So let me just get the pen out. Bear with me, guys. Okay, so starting off with the good old-fashioned Fibonacci retracement. I assume most of us do understand the Fibonacci retracement, and all this really means is within the trend. So our trending structure. Do you remember we had the higher high, we had the series of higher highs at this point, and the series of lower lows at this point. With that, we can project or forecast the retracements. So these are the retracements, these legs here. These are the retracements within an uptrend. What we can do is we can plot our Fibonacci retracement using the Fibonacci retracement tool, and we can start at point 1, drag our Fibonacci retracement tool to point 2, and what that will do is then extend a number of Fibonacci ratios at this point here. So what will happen is you have the 38.2, the 50%, the 61.8%, the 78.6%, and the 88.6%. Very deep Fibonacci ratios, these two. And what that helps, what that does is it really helps define a potential support that price may rebound from within the overall trend. Nothing more, nothing less. I mean, we can get a lot more complex with this. You can, which I'll be showing very shortly. You can attempt to identify support through Fibonacci clusters, which means a number of Fibonacci ratios converging in one area. So you have, say, a 38.2% at this point here, and we take another from the low down here. We take from 0.1 and we extend that all the way up to this one, and that gives us, say, a 38.2% that converges around this point here. So the more reasons to trade, the more likely the area will react, if that makes sense. But that's the gist of a Fibonacci retracement. And it's the same for a downtrend. This, as you can see, is an uptrend. All we do with a downtrend is we plot from 0.1 to 0.2. And what that will do is then extend the Fibonacci retracements automatically and help project where price will retrace to, or pull back to in this case, to define a potential resistance where we could potentially sell the rally. Hi, Manpreet. Yes, of course. We have a question here. Are you able to demonstrate this through a real life chart, please? Yes, of course. I will be very shortly. Just bear with me. And I just wanted to get the basics just in case we have any newer traders present, and then I will move over to the live charts. All right, so that's Fibonacci retracement out of the way. Any questions, guys, please do let me know. All right, let's go on to Fibonacci extension, because that's a nice, that really complements the Fibonacci retracement. So the Fibonacci extension is, again, it's a 2-point. So this is a 2-point structure. One for the retracement, 1, 2. That's all we need is 2 points. Again, for the Fibonacci extension, it's 2 points. So we start at 0.1 and we go to 0.2. We drag our Fibonacci retracement tool. But what happens? So what happens when price drives beyond the 100% 100% of that retracement of A to B? So prices quite literally change direction. It drove beyond all of this retracement, all of this price action here, and we're beyond the 100% level. Now, this is where you start looking for the Fibonacci extension. So it's an extension of this retracement. That's all it is. It has nothing to do with expansion or projection. Extension. So it's an extension of the Fibonacci retracement tool. Now, what happens is when we plot the Fibonacci extension, this will give us, say, the 1.272% and say the 1.618%. These are the only extensions I use anyway, but there are others. And what happens is once price gets down to these levels, we can see a rebound from these levels. Now, do I use these regularly? I do in some circumstances, which I will show you on a live chart shortly, but overall, and they are present in some advanced harmonic patterns. I believe the butterfly pattern, which I don't use, by the way, uses a 1.272%. So it would be here, fib extension from point A to B. Anyone that trades harmonics here, you can correct me if I'm wrong. But the Fibonacci extension tool, the nuts and bolts of it is it's an extension to the Fibonacci retracement, nothing more, nothing less. All right. So this can be very handy when you're trading in a trend, right? So we have the trend here, higher high, higher low, higher high. And what happens below these higher lows? We have protective stop loss orders here. We know there will be stops below here from those that bought the dip, bought this dip here, and they'll have protective stop loss orders here. Some will have moved reduced risk to break even and have their stop loss orders here, but all of these are sell orders. All of these are sell orders. And on the breakout below this low, what else will this attract? It will attract breakout sellers, so more sell orders. So the idea of the Fibonacci extension, how I interpret it, is we can potentially fade a 1.272% if it aligns with other structure. I'm not saying solely base your decision on the 1.272%. We can fade all of this sell stop momentum, if you will, and buy into that. All right, so from a 1.272% Fibonacci extension. All right, so going on to expansion. This is really when you do not have this retracement. So we do not have this. So this is not seen on the price. So we have a dominant move to the upside, and we really want to project, if you will, project where price may terminate. And this is really I would say it's a 2-point structure, but really what you have to do is you start at point A here, you drag the expansion tool to point B here, and then you pull it back to point A. And what that will do is then project, is then offer you some expansion levels at point C. So this could be in the form of a 1.272% expansion or a 1.618% expansion. And what this does is offers you, take profit targets if you're long this market, and there's no resistance, no obvious resistance present. We can use that as a potential take profit target, or we can use it to help complement resistance. All right, so this is a 3-point structure, I would say. 3 points, it requires to, all right, it only requires 2 points, but we have to drag it from A to B and then back to A. So it's a 3 move, if you will. All right, so finally, the projection. Now, the projection is a defined 3-point move, and the projection is derived from point A. We drag the projection tool to point B, and then we drag it to the retracement, point C. And what that will do is then give you it will give you a projection based on A to B, extended from point C. All right, so this is why it's so good. The projections is so accurate for me to project the AB equals CD, because look, what it's doing is projecting the value or the movement of A to B from point C. So point C could be down here, as long as it doesn't engulf point A. Point C could be down here, and what it does is it projects the value of A to B from point C. All right. So, and what the expansion does is quite simply from projects the A to B value. I hope that makes sense, guys. It may become clearer as we move over to the charts. Just checking we have any questions. All right. Good. Okay. So let's kick over to the charts, guys. I should have said at the beginning, if you trade Fibonacci, or you're currently looking at your charts right now, please do highlight what you're looking at in terms of Fibonacci. As I say in most of my webinars, there are no silly questions, so or silly charts. If you're learning about Fibonacci, please do tell me what you're looking at, and we can look at it together as we move to the live chart. Whoops, I shouldn't have done that. Sorry, guys. So, all right, so this is the pound dollar on the daily time frame. Now, this is something I've been, I've advertised, but I've demonstrated in the daily market report that I do every day. And as you can see, we do have a what's known as a Fibonacci cluster here. So as I tried to explain through the pre-drawn examples, we have an area consisting of a collection of Fibonacci ratios. Now, these are a collection of different Fibonacci ratios. They're a collection of Fibonacci retracements. You'll see projections in there, and you'll also see the 50% ratio, which, to be clear, again, is not a Fibonacci ratio. So, as you can see, the pound has reacted to this area. So let's highlight this area, and let's try and define each component to this that forms this area of resistance. But at the moment, as you can see, the pound is battling for position. So the buyers and sellers are squaring off between this 200-day simple moving average, which is, as you can see, is offering support. So we have mean reversion traders coming in off this point here. And we also have traders reacting to this Fibonacci cluster. Okay, so how did I define this? Fibonacci cluster. So first of all, I looked at I think it was just bear with me, I'm trying to find so I took the 61.8% from this retracement, this lower high here, and extended this down to here. So follow the 2 points here that are highlighted. And that gives us our 61.8%. And that really forms the upper limit of our Fibonacci cluster, 2437. I then took I think this might be the 50%. So the 50% is then from the ultimate high here. Not ultimate high, but a very, very notable high that was formed back in early 2021. And I extended that back to the same point at this point here, and that gives us the lower limit of the Fibonacci cluster at 2317. Now you can see what we've done here. We have a lower boundary, and we now have an upper boundary. So my job as a Fibonacci trader is to attempt to find or locate other Fibonacci ratios that converge with this area. And we did that. We found a very deep 88.6% retracement ratio at around, from this point here, follow the highlighted points, from this point here, and again to that low point here. This is the record low formed on the pound. I think it was back in late September. Yeah. So from this point to this point, we then have an 88.6%, as you can see, sits nicely within our Fibonacci cluster. Now, I hope you can see what we're doing here. As I said, we are building a case for Fibonacci confluence here. And this is a strategy in and of itself. It's providing you a very high probability area of resistance. So we now have the 88.6%, the 61.8%, which if you remember, forms the upper boundary. And we also have the 50% retracement, again, not a fib level, but is very reactive, it's proven very reactive. So I do tend to look at that as well. And that forms our lower boundary. So are there any others? Now, in terms of the Fibonacci retracement ratios, I've done all I can really here. You could have picked some of these here. Now, just to be clear, how I define a valid retracement is simply I want it to at least extend past the 38.2%. So as you can see, it clearly has here. But I found no retracement ratios converging with this. So I was quite happy with the 61.8%, the 88.6%, and the 50%. Is 88.6%? Yes, it is. It's, let me just prove that. So it's the square root of, I think it's the square root of 78.6. I'm just trying to, there we go. So we have a question from Manpreet. Is 88.6% a fib level? Yes, it's the square root of 78.6%. And yes, as you can see, 8.86. So yes, it is. And we also have the, I think the 78.6, if my memory serves me correct, is simply the, yes. So the square root of 61.8% gives us our 78.6%, and the 88.6% is the square root of that value at 71.8. I hope this is right. And no, it's not. So I'll have to think about it. I just did it, 88.6. All right, I've confused myself now then. 78.6, 78.6. There we go. It's a square root of 78.6. 88.6 is a fib level, or a fib ratio, I should say. All right, so we have our retracement ratios formed within our area. So I could not find any more here. I was quite happy with what I had, so it's time to work on the approach. So as you can see, I started with a Fibonacci. Guys, I hope you recognize this. This is a projection, a 3-point structure. 1, 2, 3. Start with the most basic. It's very obvious, this area. And what this did is this offered us, I think it was, just bear with me. I have to zoom in here just to make sure. I think it's the yes, it's the 1.272% Fibonacci projection. And as you can see, that comes in at 2377 and fits nicely within our Fibonacci cluster. So that's our projection. We also have another projection here. So from, let me just get the 1.618 highlighted. So from this point here, so just follow the points. This is the higher low, higher high, higher low, and we extended that form, to merge with our Fibonacci cluster. Now, is this a really great Fibonacci cluster? No, it's not. I mean, they're rather spread out, but I hope you get the gist of what I'm trying to say here. If we have Fibonacci ratios converging closely in a real tight area, they prove to be very, very high probability. Again, guys, the more reasons to trade, the more likely a reaction will be seen. And as you can see, we have had a nice reaction so far. If we break below the 200-day simple moving average, I do anticipate further selling on the sterling against the greenback. Any questions on this Fibonacci cluster, guys? And also, just a quick reminder, please do try and send over your examples you're looking at. If you trade Fibonacci or you're interested in Fibonacci, try and find some on the chart and we'll bring that up to talk about. All right, so on the pound, on Bitcoin. Now, Bitcoin really needs no introduction of what happened here or here. So I noted recently on Bitcoin. So in terms of additional confluence, additional confluence, additional support for an area. I always look, you can look at indicators. My favorite really is the RSI. I don't really look at any other indicators, to be quite frank. It's always the RSI. That's what I studied when I was first began my journey trading, and that's what's kind of stuck me. But you will note that as you become more experienced with price action, you can actually spot this on the chart, what the RSI is telling you. I suppose for me, it's just it's a lazy way of, identifying periods of weak upside momentum or weak downside momentum, if you will. Now, here we have an AB equals CD structure. Now, I will draw this in for you. Bear with me, ABCD pattern. And again, guys, this is one of the most simplest AB equals CD structure. So, and note what it does is it aligns nicely with the 100% projection. Remember the projection, the projection. All the projection is doing is extending, is taking the value from A to B and extending it from point C. So it's essentially giving you the AB equals CD termination point. And as you can see, we did hit that. Now, I must point out that I do also follow the works of Scott Carney. If you've not heard of him, do a quick Google search. He's a very, very experienced harmonic trader. And what he said, what he highlighted in his book, The Harmonic Trader, do a search for that on Google, very good book, is that the AB equals CD has reciprocal ratios. So the reciprocal ratio of the C point structure of the AB leg, all that means is A to B is extended from C to D. But what we have is we have reciprocal ratios that complement this 100% projection. Now, this is where the Fibonacci extension comes into play. Now, let's move this so I can show you. Let's delete that. So the Fibonacci extension, if you remember, is an extension of a retracement beyond the 100% Fibonacci level. Let me draw this on the chart just quickly. So imagine price is here, we're rallying higher and we reach a peak here, and price is now returning. All right, we've hit the 50% Fibonacci, we've hit the 61.8%, the 78.6%, and we're now at the 88.6. We're very deep within this retracement here. And we break below the 100% level here. So if you want me to show you, I can. Just bear with me. I think I still have it on here, and I don't. So no, I don't. But look, there's 0% and you have the 100% here. So if we break below this level here, we are now in extension territory. If you remember, so we extend past 100% retracement, and we're now in extension territory. And we look for, say, the 1.272%. And the 1.618%. Now, in terms of Scott Carney with his AB equals CDs, he lists a number of reciprocal ratios. Again, look, guys, do buy his book. It's very, very good, and it really opens your eyes to how harmonics can really help you project price action. So what he does is for let me just check the retracement here, just to give you an example from the retracement. Let me just get rid of this. Just want to see how deep the retracement went here. So at this point, we have a 61.8% B to C retracement. With that, what he looks for then is he looks for a 1.618% Fibonacci extension, but do bear in mind, Carney refers to this as a projection. So I look for a 1.618 projection. As you can see, it complements the 100% projection at this point. So it's a 100% projection alongside a 1.618% Fibonacci extension. All right, so we had a nice, this is how I would like a Fibonacci cluster to look. So add another two or maybe another 1, 2 Fibonacci ratios here in this formation here. This is a very, very nice area. Now, couple this with RSI negative divergence within overbought territory, and we have ourselves a very nice strategy. As you can see, price reacted lovely to our area of confluence at this point. Let me just highlight that so we can all see. So we have a nice area of Fibonacci confluence there. And we really haven't even included price action at this point, because there's not really much here that that told me, okay, this is a nice area of resistance. This all looks consumed to me in terms of price action. So, but the confluence derived from the AB equals CD and the Fibonacci extension complement, if you will, the reciprocal ratio, and the RSI divergence. This is a H4 timeframe, sorry, guys. So it's more of a swing trade. And look, you can see Bitcoin has reacted very nicely to this area. Now, in terms of take profit targets, Carney, in terms of the AB equals CD, what he does is he offers us this. He looks at the 38.2% and 61.8%. So the 38.2% derived from legs A to B. So as you can see, I have extended that, follow the highlighted points, point A to point B. And that extends our 38.2% and our 61.8%. So these are the two profit targets that traders commonly view now. So we look at the 38.2% as an area of potential partial profit taking and reducing our risk to break even at this point. So yes, and then following this, if we break below here, some traders look to initiate a trailing stop at this point here, or just take profit for the entire position. Now, in terms of stop loss orders, where I cannot remember what Carney says in his book, but for me, I would always turn to price structure. So this high jumps out straight away. But I would also look at the projection tool and look to see where the 1.272% lies. So I would probably be looking to place my stop above here. You could even, if you're more conservative, look at the 1.618, which really aligns with that high, right? So you could, these are the two locations I look to place my protective stop loss orders. Okay, let me see. Questions. All right, thanks, guys. There's some really good questions here. Scott, sorry, Steve, are there any books or YouTube videos available to learn more about Fibonacci data? So there's a good book by Caroline Baroden. I think that's how I actually own her book. Excuse me. And it's How to Master Fibonacci Trading. Yeah, so do a search for her. She's very good, and she really does explain the Fibonacci projections, retracements, and looks at Fibonacci clusters in detail. And she's also, if you just type in Google Fibonacci Queen, this is who comes up. So Fibonacci Queen would be your best Google search. In terms, I see your other question there, Steve. Scott's surname, it's Scott Carney, C-A-R-N-E-Y. Very good. He has a website. I think it's a paid subscription, but again, guys, his book, I think you could buy it on a Kindle, on Amazon. It's worth a read if you're interested in harmonic structure. He's quite active on YouTube, I think, as well. Check out some of the free stuff before you obviously commit to his book and things like that. Okay, Franklin, I also see your question on the Aussie dollar Swiss, the M15 timeframe. Give me a second and we'll pop over to that shortly. All right, guys. So that's it really for Bitcoin, where I stand right now. Any questions, do let me know. Now, onto the US, the major US equity index space. There are a number of, so let's focus on the NASDAQ 100. So the NASDAQ 100, look, this is not I don't like this. I just put this in there just to add a little bit of price action confluence. This is really not something I would really include. It's just something that may have drawn your eye to if you look at this. It's an ascending support term resistance. It's not a trend line. Not really. It's not a trend line because a trend line should really identify a trend, which it doesn't. Okay, so sorry. So we have Fibonacci Confluence here. This is on the daily time frame for the NASDAQ 100. As you can see, we have a number of Fibonacci ratios. Now, I encourage you to bring these charts up yourself as well. So we have the, let's highlight this one. Okay, we have the 61.8% Fibonacci retracement ratio at 11,868. And this was derived from this point, this retracement here to the low. Now, we also have the 50%, again, not the Fibonacci ratio, guys, drawn from the high, the lower high formed in the overall downtrend. And we take that and we draw that to this low here. Now, I could not find any other Fibonacci retracement ratios, but now we have something to work with. We have our 61.8%, 11,868, and our 50% retracement at 12,088. This forms the basis of our, let me draw that properly. This forms the basis of our Fibonacci area, if you will. Again, this is not a great example of a Fibonacci cluster, if you will. I do want them to be much tighter within a range, but it's just to give you an idea. So after we found the number of Fibonacci ratios, we then look to the projections or expansions. I haven't looked at the expansions, just to be clear here. I've just looked at the projections. So we have I think this is, let me just highlight that, bring that in. We have a Fibonacci 100% projection taken from this point. Remember, projections are 3-point structures: point 1, point 2, and point 3. And this gives us our AB equals CD at 11,861. All right, so couple this with a 1.272%. Now, the 1.272%, again, taken from Carney's work, the AB equals CD, this 100%, the AB equals CD reciprocal ratio for I think this was a 78.6 retracement. This would pinpoint a 1.27 or a 1.27 in his book percent retracement, and that comes in at 11,977. And this is all I really found. So 4 ratios in a reasonably tight formation. I mean, again, as I said, I would like to see them much tighter. But as you can see, we have reacted nicely to this area. And we look like, after yesterday's doji, we look like we may be heading lower below this local support here. Now, we do actually have another area on the S&P 500 on a daily time frame. This is not a Fibonacci cluster, but it's just something showing you the AB equals CD. So A, B, C, D, and that's projected at the 100% Fibonacci 100% projection at 4,116. As you can see, we just missed this area. Now, the reason I brought this chart up was because we look for Fibonacci as a Fibonacci trader. We look to complement our Fibonacci ratios with technical structure, with sometimes volume, with sometimes other technical indicators. So, for instance, the RSI. But here we have a nice area of trend line resistances here. As you can see, it merges nicely. And we also have 200-day simple moving average. So where this area is circled here, we also have the 50%. But again, not the fib level, guys. We have a nice area of confluence. And as you can see, we did react nicely. I think I posted this in the daily market analysis when price was trading around here. I did. I remember posting that the price action looks shaky above the 200-day simple moving average. And as you can see, it was indeed shaky. So that was a nice whipsaw above the, so a whipsaw above the 200-day simple moving average would be termed as a bull trap, which traps the buyers essentially. So we have breakout buyers coming in. So look, we broke above the moving average here in strong form. Now, breakout buyers would have been coming in here. Buy. You know, the S&P is going to the moon. What happens is when you buy into all of this technical structure, what can happen at times is we form what's known as a bull trap, and a strong sell-off emerges from that as larger traders look to come in and take advantage of all of that buying momentum here and simply fade into it and sell into it. All right, so that's really all I have in terms of the charts. There was the AD. Let's have a quick look. Let's get a new layout. So the Aussie dollar Swiss on the M15. All right. So this is the Aussie dollar Swiss. Let's remove the tick volume. Aussie dollar Swiss on the 15 minutes. So we're going very short term here. Let me see what here, Franklin. All right, cool. So what are you looking at here, Franklin? Can you pinpoint any levels for me? That would be good. What you're looking at, or do you just want me to analyze the chart and see what I can find? I mean, the first thing that really jumps out to me right now is this move here. So we have a potential projection. It's 100% projection up there. All right, no worries. I'll analyze it. No problem. So right now I'm looking at this. So essentially, if we break above this high here, we could be looking at the 100% projection at this point here. I don't think we are going to keep within that structure, but more closer to home, if you look here, we do have something potentially brewing at this point here. Let me just make sure we're getting this right. We do have something potentially brewing here at this point. So as you can see, we have, let's see if we can find anything else. All right, let's remove the 61 point. So the 61.8% looks very, very nice. And why is that? Because if you look at the overall trend, we have a lower high, lower low, lower high, lower low. So what happens when you get this trending pattern is you'll have sellers coming in, and you've got sellers coming in here, sellers coming in here. And, you know, in terms of the trend, there will be stops below, above here. All right, so you'll have, well, that's a very nice head and shoulders top there. We'll have a stop above here. They'll have stops above here. So you'll have breakout buyers looking to come in here, and you'll also have protective stop loss orders for those shorting deep within this retracement here. Okay, so knowing that, we can now look at this 1.618. So I do like this area here, but we'll have to see if there's any Fibonacci confluence soon. But I'm more interested in the 1.618% that's above this, because it really lines up with the overall technical structure. So let's see what we can find. So let's ping up the Fibonacci retracement, and let's bring that down to, look at that. Very nice indeed. Now that is how I like to see the Fibonacci clusters form. Now, when you see that, that's very, very nice indeed. I hope you can understand this is what I look for, what many traders look for when we're looking at Fibonacci clusters. So we have the 61.8% at 63,564, aligning with a 1.618% Fibonacci projection. Okay, let's find out if we can see, let's see if we can find anything else that aligns with this. So let's take this high here and test the Fibonacci retracements. Let's remove this one and let's go a bit deeper. Nope, 78.6. So look, we have the 78.6%. Not great, but let's keep it going. Let's see what else we can find. Let's draw our rectangles. This is exactly what I did with the examples. So we have an area of interest now. All right, so let's see if we can find anything else. I'm trying to think of what else we could use the Fibonacci expansion tool here, which is, remember, 0.1, 0.2, and drag that back to 0.1. See, the area is getting a little bit bigger now. So we have a 1.272% Fibonacci expansion. All right, so in terms of Fibonacci confluence, I still like this area. I really do like this area because of this, the confluence between the golden mean and obviously its inverse ratio at 61.8%. So this is a very nice area that aligns nicely with the technical structure. So I don't see, well, we could even go a little bit deeper here. Let's see what we can find, see if anything aligns with this area here. All right, let's move this over here so we can see 61.8%. No, 50%. Nope. No, so there's nothing aligning with this area at the moment. And they are the most obvious in terms of Fibonacci ratios that I can see. So yes, I would be looking at this area here because of, as I said, because of where it's placed. It's popped just nicely above that high there. Is that what you was looking at, Franklin, at all? Did you have any ideas on that? So we could even look at this. We could even try and, no, there's nothing else. So let's remove this one here to keep it. Whoops, I shouldn't have done that. Let's remove all of these ones here except this one. So we have a nice area of potential Fibonacci confluence around this area. And we do have some support term resistance at this point here. And I wonder, no trend lines. There's nothing really else that's jumping out to me. So yes, we do have a reasonably nice area of resistance. Okay, Franklin, excellent. All right, guys, any questions before I look to end things? So I'm going to bring that back up. God, I'm terrible with this technology at the moment. Just bear with me, guys. All right, so let's swap the presenter side. There we go. All right, so questions and answers. I think I've got most of them. Look, I really appreciate your time, guys. I really do appreciate your time. And I do hope you've found some use in this session. As usual, any questions can be sent to either support team, comments and feedback, guys. As well as, any questions as well on the material shown today. Support at fpmarkets.com or market analyst at fpmarkets.com. I would encourage you to use market analyst because it goes directly to our team, and we can get back to you as soon as possible. We do have do make sure you keep updated with our FP Markets Twitter and our FP Markets Telegram. We're reasonably active on there. I do post the odd chart here and there. Look, we also have an in-depth trading academy. This is designed for new traders. Look, do pay that a visit. And again, look, any questions, do fire them over to us. In terms of upcoming events, just bear with me here, guys. Just bear with me. We have for December, as it's nearing Christmas now, things are going to start slowing down with trading as well, guys. So this is not just with FP. So we have on the 22nd of December, this is at the same time, guys, and this is risk management in trading and investing. Now, I would really encourage you to join this because without risk management, it's very, very likely you will fail as a trader. So risk management in trading and investing is very, very, very important. And this will be, as I said, at the same time. All right, so let me just check if there's any other questions. I cannot see any. All right, so Manpreet, how to look for the 88.6% level in Trading View? You have to set that yourself, I believe, unless it's already in there. I cannot remember. I did that so many years ago now. I think you have to set that yourself. Just add just click add a new input, and you'll be able to do that. All right, guys. So thank you very much for your time once again. Have a wonderful day, afternoon, or evening, wherever you're joining me from. And I'll catch you all again very, very soon. Thank you very much. Goodbye.